bullish momentum came roaring back today after the big gap up this morning. The S&P 500 was up 1.54%, closing at 6832.43. We talked about this in last night's video, the possibility of the 6650 area holding as a major support level. This was support back in the middle of October, and we were seeing a lot of volume and gamma exposure at higher strikes. And so the continuation today is not a huge surprise. We're continuing to see gamma exposure building at the 6,800, the 6,900, and as we'll see later on, the 7,000 strike. Another key factor that we discussed in last night's video was the bounce off of the 50-day EMA during Friday's trading session. We wanted to see this bounce hold today, and we certainly got that. Being up over 1.5%. You can see gamma exposure at the 7,000 strike, still the largest concentration. That's our upper dealer cluster zone on a total time frame on the daily chart. This continues to be where the overall trend is pointing to. You can see volume in the options market also skewed to the upside. And we're going to do a deeper dive into the possible roadmap into year end towards that 7,000 strike, as well as take a look at the Qs and the volatility index. In our live stream tomorrow, which is at 10:30 a.m. Eastern, we'll also be discussing this in our community Discord. I'll put links in the description below to both of those, which you can check out for free.
Thanks, Anthony. Yeah, let's start with QQQ, which despite the large gap up this morning, actually started out with quite an uncertain picture. But the largest GEX cluster was actually at 614, which was quite a bit lower than the 622 price that we saw around that time early morning. So I initiated a short position. I actually used MNQ, the NQ micro futures contracts. I like those for directional trades. So I'll show you what happened once I took that short using MNQ based on the QQQ GEX. That was at roughly 10:35 Eastern time. And you can see here on the right-hand side, we have our net GEX. The positive GEX was at that 614 strike we just discussed. And you can see that there's really nothing major above that at the time. So we established the short. I also noticed we were below the whole moving average on a variety of time frames. And it didn't take very long. You can see price actually declined like a magnet. We did reach 617 from that starting point of almost 622. So a pretty nice short just for the mid-morning. And in fact, we were having a pretty lively discussion in Discord at the time, and I was able to open and close that trade before we were even done going over all of the indices that morning. So we ended up netting $755 on that small intraday short trade, and some people captured more by waiting for the price to get closer to that 617 low. I did want to mention something very briefly on the daily chart. We went from negative GEX Friday to positive GEX today. We did see a fairly large one-day swing in net GEX. Of course, this also left this big price gap, and we see QQQ testing the declining daily whole moving average.
Thanks, Sean. Next, let's take a look at GLD, the gold ETF. GLD was up 2.73% today, closing at 378.38. We talked about this as well in yesterday's YouTube video, the consolidation that gold had been in over the last couple of weeks on GLD, specifically between 360 and 370. We also noted the 375 and the 380 strikes as the largest gamma exposure concentrations, and we were expecting a move higher in gold, at least to target these levels here, and we certainly got that today, right in the middle between the 375 and 380 strikes. Since 2024, we've seen GLD hold its 50-day EMA. Basically every single time we've gotten into or dipped slightly below the 50-day EMA, we've seen buyers step in, and this was apparently the case as well over the last couple of weeks during this consolidation period as the 50-day EMA continued to rise and catch up basically after this pullback that we saw earlier in October. Today, we also saw large volume at higher strikes at the 385 strike in the options market, as well as at the 405 strike. So many of the out of the money strikes to the upside seeing large volume today, And if you've been following us for a while, you know we are running a weekly income strategy on GLD, but our most recent strike that we were focusing on was selling puts at the 375 strike. We also have longer dated puts at that 375 strike as well. So the move up today back towards the 375 range was a big move for our position. We're going to be looking to roll that position here this week. By the way, you can track our trades in real time as we manage our options portfolio by becoming a member at geeksoffinance.com. You can also get a sneak peek of what we're trading right now by heading on over to our community Discord. I'll put links in the description below to both of those so you guys can check it out.
Looking at the VIX, let's look at the weekly chart. The VIX also briefly touched positive GEX territory Friday, only to fail and see a sharp rejection with a move back into negative GEX territory at the close today. And we saw the VIX, of course, hammer at almost 8% to the downside, closing at 1760. Now, we have a couple of issues here. Number one, we still don't see very much net GEX at all below the 16 strike now. 16, 17, and 18 appear to be fairly significant, with a lot of volume at 18. No surprise given that we closed not too far from 18. So we still have this issue of higher highs and higher lows with the VIX that really bulls will want to see resolved to the downside, with the VIX hopefully, for the bull's sake, coming back down toward the 15-16 area.
All right, next let's take a look at Palantir. Palantir, a huge move today, up 8.81%, getting back up into the 190s, 193.61 the close today. We talked about Palantir several times last week, and I just want to take a look here on the 15-minute chart. Just going back the last few weeks, you can see Palantir bouncing off of this 170 lower dealer cluster zone multiple times since earlier in October. We've been seeing large positive gamma exposure at the 180 strike all the way up to the 200 strike. This 200 strike has been in focus now for the last month to month and a half, and so the bounce off of this 170 level was a very key support. We'll take a look at the daily chart here in a second to see why that was such a key level. But with the big move today, it does look like bullish momentum is back, and it does look like market participants want to retest all-time highs with potential targets into the low 200s by year end. Let's switch over now to the daily candlestick chart. You know, I mentioned the big support level at the 170 level. Well, the 50-day EMA is also sitting at 179.24. Palantir has a pretty decent history over the last year or so of piercing the 50-day EMA below that level before buyers step in. We could see that happen multiple times back in August and September, and also happened again last Friday. So we took that opportunity to take a long position in Palantir, especially with the large positive gamma exposure that was continuing to show at the 200 strike. You can see back in our community Discord from our post back on November 7th, we took an idea in Palantir in both of our portfolios. In fact, we bought the November 21st Palantir 180, 190 call debit spreads for $2.87. And you can see from our post at the time, you know, Palantir coming right into that 50-day EMA during Friday's trading session. It looked like buyers were beginning to step in and take a look at the gamma exposure setup at the time. Large positive gamma exposure at that 200 strike, and that was one of the prompts coming into support at our lower dealer cluster zone down here with large gamma exposure to the upside. That's one of our favorite setups. So with Palantir now trading well above our 180, 190 call debit spread, we're likely going to lock in our profits this week on that position. And I'm going to be looking ahead to see how price reacts over the next couple of days. But with a large positive gamma exposure remaining at the 200 strike, and with volume starting to come in at higher strikes, this may be a name that we continue to play into year end, as I mentioned before, with the growing probability that Palantir could see prices in the low 200s in the coming weeks.
Thanks, Anthony. Before we wrap up, I did want to take a very brief look at IWM, which was the standout amongst the major U.S. indices today in actually gapping up and closing above the daily whole moving average. Now, the whole is declining, so this is a little bit of a problem. But if price continues to stay, I would say, above this 240 area, we have a better shot at being able to see this correction in the rearview mirror. We did see some GEX diminish at the 230 strike today, and we still have some upside targets at 250 up to 260. So there's definitely upside potential for IWM.
And guys, for a limited time, you can get an additional $300 off our yearly portfolio manager tier subscription. Use code FALL2025 at checkout. We do have a few spots remaining on this promo, but it's going to be ending soon, so definitely take advantage of it while you can. Members get full access to our GAM exposure dashboard, our option flow analytics tools, as well as our algorithmic trading strategies. And you'll also get access to the premium channels in our community Discord. There's a ton of great traders in there sharing their own trade setups and strategies, and you can also track our trades in real time as we manage our options portfolio. I'll put links in the description below to all of that so you guys can check it out. Thanks so much everybody for watching, and we'll see you guys in the next video.